If you're ready for freedom from the grind, then passive income from real estate investing is the best way to get you there. If you don't know where to start or what to do next, then the Rent Roll Radio Show is the best place to get you there. Join us while we discuss the best practices, strategies, and mindset you'll need and give you actionable content to get you from where you are to where you want to be. Hey, Rent Roll Radio listeners, as always, I'm your host, Sterling Chapman. Today, we are here with Chris Larsen with Next Level Income. Chris, welcome to the show, and thank you so much for joining us.
Sterling, great to be here.
Chris, could you tell us a little bit about your background? Tell us your story, what you did before, how you got into real estate, and what you're doing today.
Yeah, so I we were chatting a little bit before the show. Bought my first property 25 years ago when I was 21 years old. And it happened because I went to school, went to Virginia Tech, and I was studying biomechanical engineering, but I did not want to be an engineer. I figured that out 2 weeks in. I was sitting there in one of my professor's classes, and he was talking about, what it's like to be an engineer. And I'm just thinking like, I don't want to do this, but I was racing my bike at the time. So I started racing bikes when I was 14 years old, and I went to school. I actually got in-state tuition through that program. Always loved physiology, biology because of my interest in human performance through cycling. Even thought about being like a doctor, but that wasn't really a good fit for me. So basically, I just wanted to race my bike. And for anybody that's familiar with the sport, or really any professional sport, if you're not at the highest level, you don't really make a lot of money. It's not a fantastic career option. So I was always kind of doing stuff on the side. I actually started selling wrapping paper when I was 12 years old. I was entrepreneurial. But what happened was between my freshman and sophomore year of college, my best friend, who was my training partner, my roommate, had a massive brain hemorrhage and died. And it was June 21st, 1997. I went back to school. And I used the bike as my therapy that year. And I just poured all my energy into it. My grades weren't that great. Remember, I didn't want to be an engineer. So it was really, kind of a struggle. I was like, I didn't want to be in school, didn't want to be an engineer, just wanted to race my bike. And after a year of that, I won. I was doing very well. And I won actually my friend's memorial race for the second year in a row. And I was in phenomenal shape. Actually, I was in such good shape. Somebody had thrown tacks onto the course, and I was one of a handful of people that got a flat tire. I got spit out behind the pack, and not only did I switch my wheel and catch the pack, but I rode straight through it off the front and won the race by, a large margin. So I was just flying. It was like I had wings that my friend was giving me. But what was interesting was I won that race, Sterling, and I didn't feel anything. I wasn't sad. I wasn't happy. And it was really weird.
The melancholy that follows achievement. Yeah, you hear about it from top performers often.
Yeah, and there's a lot to that we could probably spend a whole episode talking about. Sure. Like, is it the accomplishment or is it the journey, right? Well, I went back to school and I thought, wow, like I'm training 15, 20, sometimes 30 hours a week on my bike, riding like 500 miles a week. And if I'm not loving this, is this really what I'm supposed to be doing, riding a bike around in circles? And I said, this is not, I'm meant to do more. I sold all my bikes and I said, all right, like, how am I going to honor the life I've been giving and the life my friend that Chris didn't have anymore? So I said, I don't want to have regrets. I want to have the opportunity to do what I want to do, take advantage of opportunities. And the fact of the matter is you have to have money to do that. So I set out on this journey towards financial independence, and that led me to the stock market. I was day trading. I was making $1,000 a week a year later, day trading, but it was super stressful. And I was laying in bed at 3 a.m. one morning and thinking, this is just silly. This is as silly as riding my bike around in a circle, right? And so I just started learning. I started reading books, like book after book after book, read over 250 books on money, the stock market, business, real estate, finance, everything. Got an MBA in portfolio management, bought my first property at 21. I decided that real estate was going to be my path towards financial independence.
Wow. I'm guessing that's not the first time you told that story.
It's probably the 100th time.
every time I get asked, I always have to take a deep breath before I spit it out for the 100th time.
And that's a short story. So yeah.
Well, awesome, man. It sounds like there's a ton to unpack there.
Yeah.
I actually have done a few half Ironman triathlons and a couple
Oh,
century
awesome.
races
Yeah.
as well. So I'm familiar
Yeah.
with the endurance. That's really how I got into real estate. Like that's part of my like origin story was
Yeah.
I was getting my MBA and taking an entrepreneurship class and
Yeah.
moving up the corporate ladder and was like, oh, that's not what I want to do at all. And then I stumbled upon Bigger Pockets. And just as I was training for those triathlons, I was
Yeah.
always riding. I was always running. I would, like you said, I was on the road 3-4 hours a day, just
Oh, yeah.
listening to Bigger
Ironman's
Pockets
incredible.
episodes, listening to audio books.
Yeah.
And that's how I learned everything I learned was through my triathlon training.
It's wild, right? And I think there's a lot to that. Somebody asked me here recently, like, what does it take, to be successful in real estate? And I said, you have to have the information, you have to put your plan together, and then you need the discipline and accountability. Well, what does that sound like? It sounds like training for a race, right?
I love hiring. I always say I love hiring athletes. I love hiring military,
100%.
ex-military. They
100%.
Athletes understand that it's what happens, when nobody's looking that wins it's the 4 a.m. workout that nobody knows you're doing that wins the Super Bowl, right? It's not actually what happens on that day, right?
No.
And athletes understand that. Athletes understand the process. Athletes understand that they could get just as good of a high off of a good training ride as they could on race day, right?
Yeah. Oh yeah. I just finished a ride. I'm drinking my protein shake right here.
Yeah. So I've always loved that approach, and the connection there between the two.
Yeah.
But
no, it's so important. And look, just to kind of piggyback on that, you hear about the stories of Kobe Bryant, training at 3:30, 4 a.m. in the morning, waiting for his teammates, inspiring his teammates. And people are like, well, Chris, how do you lose weight for a race? Like, how do you get ready? It's like, it's really challenging to lose weight. Like, you take something to do this. I was like, we just don't eat. People are like, what? Yeah. Like, yeah, it's just, and that's the bottom line, whether you're an athlete or you're looking to get started in real estate or you want to expand what you're doing, it takes a plan. It takes hard work and dedication.
The bottom line, and I read this, like my first job or my first internship, is like the differentiator between successful people and unsuccessful people in anything is the successful people develop the habits of doing things they don't want to do, right? Whereas unsuccessful people develop the habits of not doing things they don't want to do. I used to have this argument with my wife about getting out of bed to go work out in the morning. She's like, man, I just can't get out of bed to go work out in the morning like you because I don't want to. I was like, oh, honey, I don't want to either.
No, yeah, you don't. Yeah. My boys. Yeah. I was telling my boys, I go to CrossFit now as well to kind of, round out my training because cycling's a very, it's not weight bearing, it's unidimensional.
Sure.
And I asked my younger son, I was like, why do you think I go to CrossFit? And he goes, because you like it. I said, no, I go because I don't like it because I need to have somebody basically, force me to do something that I wouldn't do on my own. So, and that's what Michelle Duckworth talks about in the book Grit. Those kids, those young individuals that go on to become successful in their fields, yeah, they have a long-term vision of what they want to accomplish, but she especially talks about children and how the parents play an integral role because it's not demanding or pushing the kids to do something that they don't want to do, but it's encouraging them on those days that they don't want to do it. And like you just said, helping them develop those habits of continuing, that practice and developing those skill sets.
Yeah. Yeah.
So important.
This is not like an example of great parenting. This was just me snapping off, but
I can't wait. I can't wait. I'm getting ready.
In context of this conversation, this morning, my son didn't want to get ready to go to school. And I was like, well, get used to it, son, because most of the things that you're going to have to do in life, you're not going to want to do. So better start practicing now.
I love it. Hey, I don't know. Like I would say that's, listen, the world's not easy, right? And it's a jungle in a lot of ways. And as parents, I think it's our responsibility to not only share that with our children. I have 11 and 13-year-old boys, but also teach them the skills and the habits to be successful in that world.
Absolutely.
Yeah.
Let's talk about real estate, because I could talk about all this other cool stuff, biking
Yeah.
and parenting and the journey.
Oh yeah.
We're gonna have to record another episode later.
I'm down.
So tell me about the evolution of your real
Yep.
estate journey. So you started in the single family space. You started off pretty young, and now it sounds like you're doing a myriad of different syndication. It's a fund model. Is it a fund of funds model? I mean, you mentioned when we were chatting before the call, multiple different asset classes.
Yeah.
So my experience has been with just individual syndications, right? We find an apartment complex, we raise the capital for that business venture, we do it, and that's how it works out. I know several other people have done the fund model or the fund of funds model. What exactly are you guys doing, and how did it evolve into that? Because that is like that seems to be like the evolution.
Yeah. Okay, so I'll try to be concise as well. But we were chatting before the show, Sterling. We both started in the single family space, and it was real simple when I started. And this is what I love about real estate. It's kind of like cycling. You can do triathlons, you can do road racing or mountain biking or race on the track. There's something for everybody when it comes to cycling. BMX, in 100-mile endurance races, multi-day, stage races. You could be built like a football player, or you could be built, like you could be 135 pounds and 6 feet tall and be successful in different endeavors. Real estate has something for the beginner. It has something for, somebody that's worth $1 billion, right? So I started real simple. I said, hey, if I can put together a portfolio of single family properties and pay them off and have $10,000 a month coming in passive income, I'm happy. So I put that plan together, bought enough properties to do that, started paying them off, actually went into the medical device industry and started
paying them off quick.
It turned out to be a very lucrative career that I really enjoyed. I actually spent 18 years doing that in conjunction with building my own real estate portfolio. But when I got to the point, this was after we came out of the Great Recession, and I was looking at my returns. I was like, man, I'm getting like 7% on my portfolio, on my equity, and I'm paying taxes. So I was getting like a 4% real after-tax return. I was like, that sucks. This is somebody with an MBA in portfolio management. I'm getting 4%. I'm like, I don't even want to admit this. So I looked at other options, and I started investing as a passive investor in apartment syndications. And after doing that for a few years, I had a lot of people that, we talk, people that they knew I owned real estate. They knew kind of my background. Surgeons, for instance, that I work with would say, hey, Chris, what are you doing with your money? And I was like, it's kind of interesting when a surgeon that's 20 years older than you is like, hey, what do you do with your money? And what happened was people wanted to do what I was doing. So my original partner and I decided to partner with the group that we were investing with, and we bought our first property. We closed on our first property in August of 2016. We brought in investor capital. That was our first syndication. And so we started syndicating individual deals, and we did that for several years. We introduced with my current partners self-storage. So we've been doing self-storage for several years now as well. We've also branched out into mobile home parks and car washes. And some of our offerings are still single syndications, and some of our offerings are basically a fund where investors are diversified across that.
Now, are you doing any operating, or are you just kind of raising capital and partnering with solid operators?
Yeah. So I used to do a little bit of everything. So when it was just me and my one partner, you have to wear a lot of hats when you do that.
Yeah.
Right. Yeah. And then as the team has grown, I've stepped away from the operations. We've brought in people like Brian, who runs and oversees our asset management on our apartment portfolio. He's managed multi-billion-dollar portfolio in his past. We have a self-storage team that handles our operations now. I have my partner on the mobile home park side. We have a vertically integrated operating team on that side as well.
Gotcha. So these are all in-house assets. So you're not like partnering with a much larger syndication group. Like this is all.
I am a general partner in all these projects. Yeah.
Okay. Well, Okay, let's dive into that for a second, because
Yeah.
I'm a general partner in a project, that I'm not by any means the lead. I'm not by any means running the deal, right? Like I help with marketing, I help with capital, I help with a few other things, but that, like, if you would ask anybody, they'd say like, oh, that's Elevate's deal. Sterling's just working with them on it, right?
Gotcha.
So
Yeah.
that's my question is like, are you are all of the operations in house, or or do you partner, like, because a lot of fun
Yeah.
folks I talk to, they don't really like in-house. They're not in-house operators. They're like in-house
Yeah.
capital guys, and they partner with solid operators.
Yeah.
So I'm just kind of trying to understand your corporate structure, because I mean, you could say you're a GP of a 500 unit if you raised 50K for it, and they gave you a tenth of a percentage of the general
No,
partnership. Yeah. Well, I mean,
you
I'm that.
shouldn't. Yeah, you
I
definitely shouldn't
know.
do that. Yeah,
You
that's
definitely shouldn't do
that
that.
I would not say that in front of the SEC.
Oh, no. I'm not in any way saying that is legal or okay. I'm just saying there's a bunch of people out there doing it.
Correct. Yeah, and I think that's a problem. So, yeah. So, and I think that's why I'm explaining it the way I am, because I have an integral role in the underwriting in these deals. I oversee
Sure.
asset management on a regular basis on these deals.
Yeah.
I'm on due diligence tour on these deals.
Sure.
So even though I'm not managing the day-to-day operations of, say, the apartments or the car washes, I'm a 50% owner in the car wash I have here in Asheville,
Okay.
but I don't actually operate that because I pay somebody 10% to do that. Does that make sense?
Okay. Cool.
Yeah. So it's very similar. Yeah.
It's your employee that you're paying to operate, or is
That's
it like is it a partnership arrangement?
For that one specifically, he works
Mhm.
directly for us. Yeah.
Oh, cool.
Yeah,
Cool.
that's correct. Yeah. So I would say, yeah, you could say, whether they're JV partnerships or that sort of thing. But everything that we do, we have a vertically integrated operating team within those structures. But not every, like, our multifamily operating team is separate from our mobile home park operating team, which is separate from our car wash operating team, if that makes sense.
Gotcha.
Yeah.
Gotcha.
Yeah.
Oh, that's cool. But
Yeah.
they're all like you. They're in house. They're your operating team, or they're a separate entity operating partners.
They're a separate entity operating partner. Yeah.
Okay, cool.
Yeah.
Hey, there's nothing wrong with that, dude. I say that all the time when and I don't know why people are bashful about that subject. Like when I work with like more experienced partners, and I'm not the lead sponsor, I often get pushback from investors, because with investors, really the first thing is the trust. Like, do I trust you as a human being? And they know me and they trust me, and that's why they want to invest with me. And they kind of like balk when they're like, "Oh, you're not the lead sponsor." I'm like, these guys are way smarter than me. Like they have way more experience than me. Like you should be grateful I'm not the lead sponsor.
And even that first deal we did, it was a JV partnership with the group that we originally invested with. So that was a very similar structure. And it's like, well, to your point, it's like, well, if you find somebody that is smarter than you or better than you or has more experience than you in that realm, that's an ideal structure, especially if you want to scale like we have into different asset classes.
Yeah, no. To your point, going into different asset classes, I think that's the only structure that, I mean, you can't be an expert in everything, right? And
correct.
And when you try to be, you just and I've done it a million times. When you try and do everything, you just suck at everything.
It's like being a triathlete. No, my point is, most if you take a triathlete and you put them against a professional cyclist, the cyclist is probably going to be better. The professional runner's going to be better. What's interesting is the triathlete is a better all-round athlete and a better balanced athlete when it comes to it. And that's my take on investing, which is, hey, it's better to take a little bit less of the pie when it comes to these multiple asset classes and partner with that. So it's almost like a team triathlon in that sense, right? Where you take the best runner, the best cyclist, and the best swimmer, and you take turns doing those things, and you're essentially helping them out or being, part of that team, which is pretty cool.
Yeah, you take a first class swimmer, a first class runner, a first class biker, and relay them against who won Kona last year, and
no one's going to beat them.
Nobody's going to beat them.
There you
go. It's the same structure. I wouldn't have made the connection, but when you did, man, it's plain as day. So look, for the sake of time, I want to hop over to our radio round. Just 3 quick questions that I did not give you a heads up on, but I usually do give our guest a heads up. So if it takes
I prefer to be surprised.
All right. Well, the first one's simple. What's your favorite book? And I think you said 250. That should be a hard one.
Yeah, that was several years ago. So, I would say this is interesting. I talk about this in the 100th episode of my podcast, not this book specifically, but I talk about the 18 and a half year real estate cycle. Mm-hmm. And there's a great book written by Akil Patel. It's called Secret Wealth Advantage. The Secret Wealth Advantage just came out. I just finished reading it in the past couple of weeks. And Akil walks through how the real estate cycle turns every 18 and a half years. And we can track this all the way back to the 1850s in the United States. And I'll tell you what, if you know where we are in that real estate cycle, you know what asset classes outperform during different periods in the cycle, and you could prepare and almost predict the future.
Awesome. I will go check it out. I was always a big fan of Jay Scott's book on economic market cycles.
Oh, I got to check that out.
It is
Jay Scott.
I've given away 20 copies of it. I can't remember off the top of my head what the actual title is. Let's see. It is.
While you look that up, I could have cheated and said my book here, but we'll tell the audience how to get a free copy here before we wrap up today.
Absolutely. Hold on. I do want to mention this. Recession-proof real estate investing.
Oh, terrific. I've heard of that book.
It's a short read, and it does a great job of tying it all together. So I would definitely check it out. Awesome. I've always been a big Jay Scott fan. We've had him on the show a bunch of times, and he's always good with his economic content.
You have to hook me up. We'll have him on the podcast as well. Absolutely.
I'd be happy to make the introduction. Next one is, what's your favorite quote?
Ooh, my favorite quote. I always had, and I misplaced
this is the one I like to give people a heads up.
Yeah. Yeah. And there's several. I always like the never, never, never quit, which is kind of paraphrasing Winston Churchill's quote. But my wife gave me a copy of a book when we first started dating called The Alchemist. And
yeah, I love it.
In that book, Paulo Coelho, I think I'm pronouncing that correctly, says, whatever you believe with all your heart and all your mind, the universe will conspire to help you achieve.
Yeah.
And I love that. And I think what that means is that it's kind of like The Secret, right? You have to truly, in your mind, have a clear vision of what you want to achieve. But then what I would add to that is Tony Robbins, which is take massive action. So I would blend those two quotes together. I would get real clear on what you want in your heart, in your mind, and then take massive action.
Awesome. I love it. And what's your favorite thing to do when you're not working?
Hanging out with my boys. Yeah, I love watching my boys play lacrosse, love riding bikes with them. I live in Asheville, North Carolina. Love to just be in the woods, decompress. And, it's a wonderful thing being in nature.
Man, when you said you have a 10 and a 12-year-old boy, I just saw like a flash of my future. I can't wait. Because mine are 2 and 4. So
there you go, man.
I'm getting screamed at and changing diapers all day. I can't wait till we can go, hiking and hunting. And stuff,
Oh, dude, it's fun, man. They're like my little buddies. But you gotta be a dad and keep them in line. Real quick, I took my 11-year-old son to a like a financial seminar that I was presenting at last weekend in Nashville, and there was a couple of sessions I couldn't go to because of my schedule. It was 3 days, and he grabs his jacket and his tie and his room key, and he goes, I'm like, what are you doing? He goes, I got a couple sessions I want to go to, Dad. And I was like, well, I can't go, Miles. He goes, it's okay. I'm going to go down myself. He took his little notebook. So he was hanging out, and it's neat to see, your young men, your young boys become young men and start to evolve their own personalities and desires and skills. So you're in for a treat.
Awesome. Looking forward to it. How can our listeners find out more about you, get in touch with you, learn from you, invest with you?
Yeah. Well, thank you for that. Yeah. I mean, our mission at Next Level Income, Sterling, is to help you achieve financial independence through education and opportunities. We have a free copy of our book on the website. If you go there, nextlevelincome.com, you can get a free copy of the book. You can access our blog, our podcast, our course, tons of free resources. If you want to learn about our investments, which I touched on in apartments, self-storage, mobile home parks, car washes, and soon senior housing, which you have a really unique opportunity coming up in that. You can click on the invest link and schedule a call with our team.
Awesome. Chris, thank you so much for joining us. I really enjoyed it. I really learned a lot. I'm sure our listeners did as well. I'm glad we got a chance to connect and looking forward to keeping up with you on your journey.
Sterling, great to see you. Thanks for everything you're doing here.
This episode was brought to you by Crestworth Capital. If you're a busy professional and ready to make passive income from real estate investing, then go to crestworthcapital.com, where you'll be able to download a free copy of our ebook to help you get started today. Until next week, happy investing.